Shares of SoFi have gained as much as 20% in October, following a series of analyst upgrades and recommendations, and especially when Morgan Stanley analyst Betsy Graseck initiated coverage with a $25 price target, saying that the company is a powerful revenue growth story as it ramps share of the consumer financial services. The share price literally exploded by 14% last Monday. So now you know why it went up, but in today's video I want to explain why the share price can go down as fast as they went up and what I will do when this happens. So sit tight, grab a coffee and let me explain. Third quarter results will be announced on the 10th of November, and folks, remember this day and mark it in your calendar, with analysts expecting revenue of 255 million, which would represent a 10% increase from the second quarter. And therefore, you have the first reason why the stock could drop massively. If SoFi misses the expectations only by a bit, you can bet that the first will sell and generate a FUD. Fear, uncertainty and doubt. So mark the 10th of November big and in red in your calendar. But folks, this is not the only reason why SoFi can or is highly volatile. So let me explain the other factor, and now it gets really interesting. SoFi Technologies has a market capitalization of almost $16 billion, so it's too big to fly under the radar. I expected to see both institutions and retail investors owning a portion of the company. The following chart shows us that the institutions now own 39.8% of the company if you count as well the mutual funds. And we have 15.9% owned by insiders like the CEO Anthony Noto and so on. And retail investors like you and me own 44.1%. But Björn, why is this so important? Come to the point, dude. Yes, not so fast, and let me explain. Institutions typically take a longer term view when investing in a company and are less sensitive to news flow. Retail investors like you and me are more sensitive to short-term news flow, which means that when most of a company's shares are held by retail investors, the stock price can be quite volatile. So, if a large percentage of shares held by retail investors, the share price can be at risk if there isn't a continuous flow of good news. The 39.8% of shares held by institutions is quite low for a company of SoFi's size. As for example, you can see on the slide how it looks for PayPal. I mean, they were bigger, but they have 49.8% plus 29.1% institutional ownership and only 10.6% in retail. However, this can also be quite bullish if institutions increase their ownership over time. When we look at the shareholder register in June, institutions own just 10% of the shares, while retail investors own 74%. This means the trend is heading in the right direction. One of the biggest investors is SoftBank, an early investor in SoFi who owns 14.82%, which is currently worth 1.9 billion. But more importantly and nice to see is that the company insiders own a substantial stake in the company as well, as it means that the management team believes in the company. So now you know why SoFi can and will be highly volatile the next years. I will tell you what I will do when SoFi will drop. The estimated fair value of SoFi from analysts were $24.48. This estimate has subsequently increased to $30 as analysts have increased their forecasts. While these estimates appear very bullish, they are based on forecasts that could change significantly in the next years. So I think SoFi is a company with a lot of potential. The platform has managed to gain a lot of traction amongst younger consumers, and it has a wide range of financial services to offer its customer base, as I stated already in my last video, where I compared SoFi with PayPal and Square. However, growth stocks like this almost never move in a straight line, and volatility is very likely. Tracking the percentage of shares held by institutions is a good way to see where long-term investors see value in the stock. And that is what I will do. Means SoFi can drop because they missed the earnings report expectations or the bank charter fails, just to give you some examples. but that does not mean they will not be a successful fintech company in the future. So I believe in SoFi, and I will check from time to time what the hedge funds etc are doing and hold my position long, as I did my analysis prior investing in SoFi, and if the fundamentals don't change. So if you want to know when I would sell SoFi, I recommend checking out this video, because there I explain when and for what reasons I would sell a stock. For all others, thanks for watching, have a nice day, and as always, stay focused and don't get greedy. See you next time.